Hey everybody, it's Daniel here from InfoRest. Hope you're all doing well. So, last time in my last previous videos, I talked about the job market. I talked about non-farm payrolls report coming in weaker than expected, right? If you look at both the establishment and a household survey, especially the household survey showing major weakness there, about 348,000 jobs gone, lower, and you're seeing weakness in the job market, not only in that non-farm payrolls report, but also everywhere else. For example, Maersk, that is cutting employees as well, the biggest shipping company. And now also a new article, a new headline that comes out on Monday is basically Citigroup, right? So Citigroup is basically considering deep job cuts, and they're looking to basically cut 10%, at least 10% of their workforce to improve their margins, their profitability, to improve the cost structure, and etc., etc. Now, Citigroup, if you look at its chart, right, it looks something like this. If you go back to, I don't know if you could see it here on the video, but if you go back here, this peak was around, before the great financial crisis, the real estate crisis, real estate bust, that caused Citigroup to basically drop all the way from about 500 bucks all the way down, and it's been consolidating, trading sideways here for some time, right? Haven't been able to recover, right? So what makes you think that if we're going to see a pretty hard recession, and something that could be the equivalent of 2008 or maybe worse, could Citigroup recover from this? I don't know. So let's go through this article here. I'll link it in the description so you could read up on it. But it basically starts off saying, when Citigroup CEO Jane Fraser announced in September that her sweeping corporate overhaul would result in undisclosed number of layoffs, a jolt of fear ran through many of the bank's 240,000 souls. We'll be saying goodbye. So this is what she said. We'll be saying goodbye to some very talented, hardworking colleagues, she warned in a memo. Okay, so those are some pretty harsh words there, saying that she acknowledges that there are really good, talented workers there, and we're probably going to say goodbye to them. We expect that to come soon. Now, employees' concerns are justified. Managers and consultants working on Fraser's reorganization, known internally by its code name, Project Bora Bora. So they're calling this Project Bora Bora. They even have a name on this elimination of jobs in their company, which is crazy. They have discussed job cuts at least 10% in several major businesses. All right, 10%, at least 10%. So they use the word at least here, which is most likely, again, this is their minimum, and they're probably going to see most likely higher than 10%, especially if the recession expected to come next year. It then goes on and says the talks are early and the numbers may shift in coming weeks. Okay, so in coming weeks, that number may shift, right? If they feel that they need to cut more, they need to do, start early and so on. Be prepared. Fraser is under mounting pressure to fix Citigroup, a global bank so difficult to manage that its challenges consumed three predecessors dating back to 2007, already a laggard in every metric that matters to investors. The bank has fallen further behind rivals since Fraser took over in early 2021. It trades at a price to tangible book value ratio of 0.49, less than half of average US peers and 1/3 of the valuation of top performers, including JP Morgan Chase. Now, JP Morgan Chase, like I showed you also before in that chart, obviously, Citigroup compared to the other banks haven't really recovered since that 2008 crash. And it's one of the banks that have been under pressure. And now, it's very interesting here that they mentioned JP Morgan, because Jamie Dimon also sold 1 million of his shares, not all of his shares, of his own bank stocks, his own the company that he runs. And now obviously not all his shares, but that's a big amount that hasn't been seen before. the article goes on saying the only thing she can do at this point is really is a really substantial headcount reduction, according to an analyst at Edward Jones. She needs to do something big, and I think there's a good chance it will be bigger and more painful for city employees than they expect, right? Again, minimum 10%. Most likely they're going to do more. This is just her easing her way in, saying that, hey, get prepared, at least 10%, right? So if Fraser decides to part with 10% or more of her workforce, it would be one of Wall Street's deepest rounds of dismissals in years. Okay, so Citigroup's staff remains at 240,000. 240,000 is a big number, and that number leaves Citigroup with the biggest workforce of any American bank, except for the larger and far more profitable ones, like, for example, JP Morgan. Okay, so Citigroup is a big bank out there. They employ a lot of people. Minimum 10%. You know, it could be far worse, especially if the recession kicks in. Now, I want to mention something. A paragraph here. It says that this would be one of Wall Street's deepest rounds of dismissal in years, right? If they go ahead with this, and very likely that they're going to do that, right? According to her comments. When banks start to cut employees, right? We heard in the beginning in tech, we heard also other industries as well, shipping, Maersk, etc., right? We also heard in McDonald's, which is known to be a stock, a company that is, quote unquote, I put quotes here, recession stock, right? Because, if there's a recession, you're not going to go out. If you really want to go and buy food outside, you're not going to go out to a restaurant, pay $200. You're going to go to McDonald's and get $5, $10 burger, right? So the fact that you're getting all of these companies coming out, you're getting, Jamie Dimon, basically selling not majority, but a lot of his shares. You have Citi coming out, reducing its workforce by 10%. These are all signs they're telling you that they are preparing, and they're preparing, especially this is November, it happens to come close to the end of the year. As they approach the end of the year, there's rebalancing happening in people's portfolios, investors' portfolios, traders' portfolios, right? Taking some profits, taking losses, so that you get ready for the tax season next year, and so on, right? And especially with a lot of the videos that I mentioned before about, the projections that a lot of analysts and key people expect that next year, in 6 to 12 months, we could see a recession. You have even signs and proof from banks like, for example, Citigroup, who are going out and telling you that, hey, we take that call seriously, and just to put it out there, our threshold is we're going to start cutting the workforce. We're going to start, at minimum 10%. It could be worse depending on how things play out, right? Depending on how long rates stay high for longer, depending how late the Federal Reserve and the central banks out there take too long in rescuing the economy, which I think they're already too late. They're way too late to the game. I think the damage has already been done, and we're going to probably see that damage show up next year. So it's going to be interesting that how this all plays out, and these are already the signs that I'm telling you that, especially when you get a big bank saying that, we're considering this and we're going to put a plan forward to it, and we're starting to take action. This is just the snowball that is slowly getting bigger, rolling down that hill. And as that snowball gets bigger and bigger, you're going to hear more, right? This is just the beginning of the headlines. You're going to hear that, instead of 10%, it's going to be more. You're going to hear other banks do something similar, right? And I think also, I wouldn't be surprised if you see some sort of bank, big bank here and there somewhere, ends up really shitting the bed and ends up, going belly up, and there's probably going to have to be buyouts that come out maybe next year, maybe in 2025. So it'll be interesting to see how this plays out. Again, the link is in the description. You could read up on this. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.